welcome to the World Fish Farming News for the 21st of August, 2024. Atlantic Sapphire collapses. The stock price falls by 80% in one day. The Norwegian Financial Supervisory Authority has announced closer investigations following the release of Atlantic Sapphire's half-year report on Tuesday, which revealed ongoing significant production issues. The land-based fish farming company needs to raise $80 million in new equity and convertible loans due to these challenges. To attract investors, the share subscription price in the planned issuance was set at as low as 10 cents, significantly below the Tuesday closing price of 4.10 OK. The issuance was pre-guaranteed by the Dallas-based hedge fund Condire, as well as Nordlax Holding and Strawberry Capital. The stock market reacted by sending the company's share price into free fall, dropping 79.2% as of Wednesday morning. The day before the crash, trading volumes were unusually high, with shares falling sharply. Observing this, the Financial Supervisory Authority is initiating further investigations into the price and trading volume developments before the announcement, as per spokesperson Joe Singstad to Dagens Næringsliv. Grieg is hammered down to its lowest level in 8 years. The investment case depends on the sale of the Canadian business. Grieg Seafood experienced a shocking financial setback in the second quarter, reporting an operating loss of 35 million NOK, which plummeted its stock price by 14.9% to 15 OK, the lowest since 2016. CEO Andreas Kvam acknowledged the quarter's extreme challenges during a results presentation, expressing dissatisfaction with the outcome. Analysts labeled the report as catastrophic, predicting continued difficulties for the company in the second half of the year. Previously expected to post a profit of 86 million NOK, Grieg Seafood has now lowered its 2024 harvest volume guidance to 78,500 tons from 81,000. The company also provided a grim operational outlook for British Columbia, causing brokers like Arctic Securities to doubt any positive earnings in the latter half of the year. Both ABG Sundal Collier and DNB Markets foresee a roughly 50% reduction in estimates for 2024. However, DNB cited the potential sale of Canadian assets and a revised timeline for finding a long-term partner in Canada by autumn as possible positives for the investment case. Possible British Columbia exit for Mowi. Emotions and political agendas have taken over from facts. Salmon farming giant Mowi is exploring all options following Canada's decision to ban open-net pen aquaculture in British Columbia by July 2029. CEO Ivan Vindheim criticized the decision as being driven by emotions and political agendas rather than facts, highlighting Mowi's significant investments and the creation of thousands of jobs in partnership with local First Nations. Although British Columbia has not been the most profitable region for Mowi, the company is conducting a strategic review and keeping all options open. Despite challenges in the first quarter, Mowi reported strong second quarter results with an operational profit of €230 million and aims to reach a milestone of 500,000 tons of harvested fish in 2024. Mowi is distributing 878.9 million kroner in dividends. Fish farming giant Mowi reported revenues of €1.34 billion and an operational profit of $230 million for the second quarter. The company achieved substantial improvements due to strong operational performance, record-high slaughter volumes, and reduced costs. Mowi slaughtered 110,000 tons of salmon in Q2, a record for this season, and has 9.4% more salmon in the sea than last year, positioning them well to meet their 2024 goal of 500,000 tons. CEO Ivan Vindheim emphasized Mowi's strategy of volume growth and sustainability, with the company recognized by Time magazine as one of the world's 500 most sustainable companies. Challenges in the U.S. market were noted, but overall demand for European salmon remains strong. Mowi Feed also posted record volumes and earnings for Q2, contributing to overall growth. The board has declared a dividend of 1.70 NOK per share for the second quarter. The number of lice treatments has been significantly reduced, and growth and survival rates have significantly increased compared to the average over the past 5 years. Leroy Seafood Group reported a consolidated operational EBIT of NOK 906 million for Q2 2024, the highest since Q4 2022, against expected NOK 138 million, with a slaughter volume of 36,700 tons of salmon and trout, achieving an EBIT TUQ of NOK 21.2. The positive biological performance trend continued due to reduced lice treatments and increased growth and survival rates. Notably, their innovative submerged cages project showed promising results. Scottish Sea Farms also saw significant biological improvements, leading to a substantial profit increase. The BEWI Sales and Distribution segment reported an operational EBIT of NOK 217 million, driven by operational enhancements and better use of the integrated value chain. Conversely, the Wild Catch segment faced challenges with an operational EBIT of NOK 4 million due to quota reductions. Despite lower salmon prices, Leroy remains optimistic about their long-term goals, focusing on improving roe and smolt quality, new aquaculture technologies, and sustainability. Shock from algae, parasites, and jellyfish brought down Grieg Seafood. Grieg Seafood reported a negative operational EBIT of NOK 35 million in the second quarter, down from NOK 547 million in the same period in 2023. The slaughter volume was 15,272 tons, equating to an E2.3 in OK. The company faced challenges in various regions, including significant low oxygen events in British Columbia affecting survival rates and delays due to biological issues in Finnmark. The focus in Rogaland was on biomass, leading to planned reduced volumes but effective post-smolt strategies. Looking forward, Grieg anticipates further operational improvements, with ongoing investments in post-smolt facilities and growth projections despite current market pressures and biological challenges. Contact information. BEWI sees improvement after a challenging period. Fish crate giant BEWI reported its second quarter results today with a net turnover of €277 million, down from €290 million in the same quarter of 2023. The adjusted EBITDA stood at €29 million, including a compensation of nearly €8 million compared to €32 million for the second quarter of 2023. BEWI's CEO Christian Becken noted improvements in construction markets, though caution remains. In Q2 2024, BEWI completed the sale of its industrial property portfolio and made significant progress in optimizing working capital, achieving over €100 million in available liquidity. The company now targets €150 million through ongoing operational measures. BEWI remains confident in its strategy and long-term potential, having initiated a strategic review of its automotive business to reduce exposure and increase focus on insulation. The group continues to adapt costs and capacity to current market conditions and to strengthen its balance sheet.